Hello friends, welcome to the Weekend Investing Daily Bite of 29th of October, a volatile day. Markets were down, then up, then down, and then they finally closed up. So a good day from a perspective of that we didn't fall any further. But the auto sector was smashed today. Is it the end of the auto sector bull run? Have auto sector stocks run out of fuel? We will discuss this in the second half of the video. Please read the disclaimer and do subscribe to the channel if you find any value here. Where is the market headed? So market has now taken support at the bottom of the range, as we have been mentioning since a couple of days. And although it failed to make a closing above the 2-day high, which we normally look for, but it looks like a consolidation zone. The best case scenario could be that, we start moving up here and then maybe hit this moving average with some resistance in this zone around 25,000 and then navigate that. Worst case scenario could be that we have another head and shoulders pattern where the left shoulder and the head is there and we basically just 1 or 2 days and then we flop down and then we are going back much lower if this head and shoulders pattern plays out, because the head here is more than 2,500 points. So if that happens, then we are possibly going somewhere lower. But somehow, maybe I'm biased. I don't feel that market is so weak that we will go there. Strategies will take their own positions as we go along. So, I mean, whether we think it will go there or not doesn't really matter. Nifty Junior still an inside bar. What is an inside bar? That the entire range of the day stays within the previous large range day. So last 2 days, last two sessions have been inside bars, and inside bars are not decisive bars. So this could just be a relief for 2 days, and then it may the floor may fall off. But as long as this bottom is getting uh, secured for now, I think that risk is a bit less. Mid caps also up 0.8%, again within the larger bar. So once we cross this bar top, the long bar that we got uh, on uh, um, on the 27th, oh sorry, on Friday, uh, that is where the real sort of signal will come that maybe the downside is over, for at least for some short term. Small caps also gained 0.74%. So all the charts are showing gains within this longer bar, but not really beyond that yet. Bank Nifty is the one which is really showing strength. We in 3 days we have gone from 50,400 to 52,320. Very, very reassuring. Banking has made a comeback, 2% up here. And as I say many times, banks usually lead trends. So either on the downside or on the upside, this possibly is the best cue that we have that the current move down is over and banks are looking up. So banks can influence the rest of the market in going up. Momentum, uh, advanced decline trend, 330 advances, 268 declines, so good advanced decline. FIIs continue to sell 3,200 crores. DIIs did not buy as much on the previous session for 1,400 crores, but other than that, the buying has been reasonably regular. In the Nifty 50 segment, you can see State Bank of India up 5%. Now, whenever State Bank of India makes a large move, for me, it is a decisive move, because State Bank of India is like the barometer for the Indian economy. If State Bank of India is doing well, potentially it is signaling the markets will follow. If State Bank of India is cracking hard, potentially it indicates to me that the market is weak. So for now, State Bank is looking very, very sharp and good. ICICI Bank giving good support from the private side at plus 3%. HDFC Bank also, up 1% today. Axis Bank, Kotak Bank also good. So the entire banking and finance space is moving up, is looking up. Also, you had some good moves in stocks like Bharat Electronics, NTPC, Aisha Motors, Adani Enterprise came out with good set of results. ITC moved up a little bit. Hindustan Lever is definitely down, and you had uh, auto space really getting smashed. So Tata Motors down 4%, Maruti also down 4%. Bajaj Auto continues to go down, Mahindra continues to go down. Eicher Motors was the only sort of uh, one man standing out in that particular space. Nifty Next 50 also you can see mostly green. PFC, REC, Bank of Baroda, Canara Bank, all these HAL, all these public sector companies doing well. The capital goods also looking good, 2.5% and 2% on Siemens and ABB. JSW Energy racing up 6%, LIC up 2%, DLF another 1% today. And you had, falls in Torrent Pharma, Pidilite, IOC, Dabur, and some stocks. So good mixed bag, but bias towards the greens. Sectoral trends, PSU banks running up 3.6%. So this last 1 week has been a PSU banking week, 6.9% jump. It could be a dead cat bounce, or it could be a turnaround. I think the latter is probably likely, that we've seen the worst in PSU banking for now. The last 1 month is now minus 1.4%, last 3 months is minus 9%, and 12-month score on PSU banks is 37%. Bank Nifty, public sector enterprise stocks, private banks, real estate, these were the ones which really fueled the rally today. And you had autos, which performed the worst at minus 1.6%, pharma at minus 1.1%. IT also was sort of flattish along with consumption stocks. So I think a decent day, some up, some down, but I would not complain about today at all. Banks have made a comeback. They have this breakdown that had happened on the banking PSU banking index chart seems to be a false breakdown. We've come back up very, very sharply in 2 sessions. You've had Indian Bank, State Bank, Bank of Baroda, um, uh, Bank of Maharashtra, sorry, IOB, Central Bank, Canara Bank, all doing very, very well, and that would give confidence to the rest of the market also. Stock spotlight is on SGS Syrma, up 15%. So, stocks that I have not heard the name of are uh, racing up from 376 to 500 rupees in just 2 sessions. That's an amazing kind of jump. Uh, SGS Technology Limited is the name of the stock, and it is now coming nearer to its highs, and potentially this is a stock one should watch for on dips. And it is breaking out of this kind of a corrective zone of the last 1 year, and this kind of a trend may follow. So it's a good stock to have on your uh, watch list. Let's come to the discussion of the day. So is it the end of the auto sector bull run? Has auto sector run out of fuel? So we've been seeing a lot of these headlines that valuations or weak demand is slowing auto bull run. Maruti Suzuki also came out with uh, numbers that were below expectations. Profits are declining. There is a lot of inventory that is there. Some papers talked about some 80,000 crores of inventory have piled up in auto space. Hyundai Motors IPO listing also, was a very, I would say, a not so exciting event, given the size of the IPO. It has dropped 7% on trading debut after the record IPO. And you can see the auto space has really, really run out of steam. Even today's session, and where, other sectors were trying to move up, autos were moving down. So 15% from previous all-time high, we've already crossed this. If this has to repeat something like the PSU banking sector, we will want to see this at least above 24,600 to get confidence back. Otherwise, this is quite a sharply moving down kind of a chart. Individual charts are also, could be very revealing. Like for instance, Tata Motors already down 30% from the top, and Tata Motors has had this very amazing cyclicality in the last 30 odd years, where every decade it just collapses. So in this decade, it went from nearly 100 rupees to 10 rupees, and then in the next decade, it went from nearly 200 rupees to again 30 rupees, and then in the next one, it went from nearly 600 rupees to 70 rupees, and we had now turned back at 1200 odd. I don't know where this goes, whether this stays on for some more time or it comes down to, I don't even want to guess that. So these kind of cyclicalities can happen because from time to time stocks become overvalued, stocks become over owned, and there are sort of, just a time correction or natural sort of distribution of stocks again has to happen from greedy hands to uh, more normal distribution. So a lot of fear has already set in into Tata Motors, for instance. You can keep convincing yourself that Tata Motor is bringing an EV or new design is coming, this and that. The stock doesn't care about all that nonsense. You will need to see what is the stock uh, performing at. The first key question here should be, why did you buy Tata Motors? And if that thesis is still playing out, then you should not worry about 30% or 50%. You should stay with that. But if you have bought Tata Motors with a price based move, then of course you are probably near a stop or something if it's down 30%. So concerns are emerging about elevated stock valuations, sluggish vehicle demand, the inventory, and you can see the growth of the current last month's numbers. You can see there is hardly any contiguous sort of growth pattern here across different manufacturers. Overall, over a year-on-year basis, we have not grown. We are down -1%, even if you were to combine all of them together. Some manufacturers have come out with some new models, so they have been rewarded. But I mean, just look at where Maruti and Hyundai have gone over the year. Look at Honda. Tata itself is also down. So there is some points of time where you know there are, and you can see anecdotal evidence. I mean, if you go to a car dealer today, they will offer you some good discounts. So if you are in the market to buy a car, or even if you're not, maybe it's a good time to buy a car or any other two-wheeler or a four-wheeler. So unsold inventory of 79,000 crores, uh, poor September numbers, a lot of discounts, weak consumer sentiment. Interest rates are not being allowed to come down. So on one hand, economy is getting sluggish. On the other hand, the RBI governor says no, it is too early to cut interest rate. So I think there is some sort of a disconnect, and something will give way. Either the finance ministry will whip the RBI chief to give some discounts, or to lower the interest rates, or there will be some sort of stimulus or something like that to come through, or maybe this is just a blip of a few months, and the festive season, once it gets going, maybe the numbers will improve. But so far it doesn't look that way, and hence the enthusiasm that was there in the markets for the auto space has gone really bad. Now, having said all that, sectors are very, very cyclical. So let's see the past few cycles of auto sector. So in the last 20 years, auto sectors have had many cycles. You had from 2004 to 2007, 170% gain in auto index. Then in the next 2.5 years, you lost 60% on that. Then in the next 9 years, you made 1,300% gain on that. Then in the next 2.5 years, you lost 63% of that. Then in the next 4.5 years, we've gained 544%. Are we looking at a 60% drawdown? I don't know. But given the history, it is possible. So don't take anything for granted. Follow, price. Do the Bhav Bhagwanche principle in life. If the price is telling you to stay in, stay in. If the price is telling you to stay out, get out. No sector can perform at all times, and there will be periods when sectors will become overowned, overvalued, as I mentioned earlier, and they will need cool off, and a big cool off if we see the Tata Motors chart from that perspective. Uh, the overall index itself is sort of not looking so appealing right now, but maybe if it crosses this is a ratio chart of CNX Auto and Nifty. If it does cross the 1.1 mark, maybe autos can make a comeback, but right now it doesn't look that way. So we can't really predict sectoral cycles. Sectors, there are always few sectors that are performing at any point of time. So always good to be invested in those sectors that are performing, and once the sectors start to underperform, just get out of them. That is the thesis that most momentum strategies adhere to, and that make sure that whatever you are having in your portfolio is sound, and at least not bleeding your confidence away. So let me know what kind of strategies you would follow if you were invested in an auto space, and if the space tries or tries to go against what you were thinking will happen, or it tends to go lower, let's say another 20% gets cut on auto space, what will you do with your holdings? Will you just buy and hold and sort of close your eyes, or will you get out? Let me know your thoughts. Thank you so much for watching. Please do like and share these videos if you do like them, and I'll see you in the next one. Bye.